For those that don't know, in March and April of this year, when all of the economic chaos was kind of going on and there's lots of uncertainty, you were one of a very select few number of people that basically I was like begging to get on the phone. I was like, help me understand what is going on right now. And you nailed it, man. You were all over it. And so that experience definitely paid off.
Yeah, that was, you know what, that was really fun because look, when you've been in the markets for 30 years, you're used to, selling climaxes and panics and this and that. And you see it in different places around the world. And March was really bad. But I can remember that one day in March when it gapped down, the Bitcoin gapped down through like 6, 5, it was 6 and then 5. And I started getting all of these messages from all these people that like, Dan, you were so wrong. You don't know anything. And I put this tweet out like, listen, it's the only time, and I'm against the cursing on Twitter just because you got to, but it was the only time on Twitter I said, what is it? I said, STFU, right? This is like the bond. This is like, this is the only really truly freely trading market. Basically, this is it, right? Like this is the bottom. This is not, I was getting bombarded all over the place. And, I just, nothing really had changed. And, anyway, it was a great moment to be involved in. And then in the weeks after, you and I did talk a lot about the dollar because that was the high. And that was part of what we were talking about was that the Federal Reserve would sacrifice the dollar before the equity market and the asset market. And so that was another, meaning they would have preferred the dollar, they would let the dollar go down as much as they needed to, as long as it ended up supporting the equity market, right? So, that was a very exciting time. And I think a lot of guys in the space sort of became more macro after that, right?
Absolutely.
Yeah.
Let's start the conversation just around gold and Bitcoin with how do you right now, if one of your global macro friends called you up and they said, look, I want to understand this, Dan, like how would you describe your thesis on gold and your thesis on Bitcoin to them?
Yeah, well, the macro guys for the most part know why and how to execute and position in gold. And you saw Tudor Jones's letter this summer, which was, I think, one of the 2 or 3 most important events in the space. He has a significant position in gold. And you can read his 8-page paper, which I think is pretty good, gives you good sense. And then, of course, Druck as well came out a few days ago and mentioned a position in gold. And so that really doesn't need so much explaining. People get that, look, the balance sheets of central banks have been exploding. M2 is up 25% year over year. And, it's really not been up over 10% at any period. Rates are zero globally. There's huge injections of liquidity going on by all the major central banks. So that's not really, that doesn't really need explanation. I think it's a little more difficult to explain Bitcoin because to own gold is to own, is to be short fiat, right? And so there's also this paper hard asset dichotomy, which really resonates with sort of more traditional investment managers, meaning they get there's paper, they get there's an unlimited amount of paper, right? Or there will be, and that there's more or less a finite amount of gold, and that it's hard, you can hold it, with 1% a year increase in supply or whatever, it's versus all the other assets out there in the world, it's finite, right? And I know the Bitcoiners are constantly saying, oh, gold, it's not finite, you can find it in the asteroid or whatever insanity that you want to come up with, but more or less. And I want to get into this because even though I do have great respect for your work, I do think that the piece that you wrote a few days ago sort of really inspired this. And we've talked about this a bit before the show. Gold versus Bitcoin doesn't end in coexistence. And it's something that, I really don't believe that's true. And I think one of the themes, if you'd say there's one theme that's consistent that I continue to put out on Twitter, is that you really have to own both. And I want to clarify that though, because and and that's because, look, there's no question that Bitcoin is going to outperform gold. So I think people should stop talking on Twitter about it's bad.
You're saying specifically that Bitcoin, from like a price appreciation.
From a price appreciation, it is the fastest horse. It will be the fastest horse. You can spend hours explaining why, but or not. I think it's and the way I think about it is, in the next sort of 5 years, I could see gold at 4,000. So that's a double. But if gold's at 4,000, Bitcoin is probably somewhere between 300 and 500,000. So that's a 20-30x. Well, it was from last week. It's still, I mean, it's about a 20-30x. And so I don't really think that anyone in the gold world, even who, even Tudor Jones, is he says fastest horse, they're not going to debate that. So so, and if you're a small investor, you may say, well, I don't need gold. I just want the one that's going to perform the best over a bunch of years. Okay, but gold has certain characteristics and traits today that I'm not sure people are aware of. And so why bother with gold at all? You use the Blockbuster and Netflix analogy, right? And I think that's actually the wrong analogy, because you, and Saylor too, by the way, who I love to death, but you come from a technologist background, right? And so you look at it and you say, Bitcoin is new technology, gold is old technology. Okay, so there is some truth to that. But that's not why gold is important today, or why it will be in the future. So, okay. So what's important about gold for people? Hold on,
let's start with gold itself, right? In terms of why is gold important today?
Right. So one of the things is gold has tremendous liquidity, right? It's an $11 trillion to $12 trillion total market value. Bitcoin is still only 350 billion. So if you are an institution, let's say you're as an example, this Norwegian oil fund, they have $1 trillion. They want to put 5% to work in, let's say, a non-fiat asset that is scarce, okay? They can't do Bitcoin. They can do $50 billion of gold in less than a week. I mean, and you can really accumulate that, right? It trades $50 trillion in volume a year.